Global equity markets are under pressure on news that US President Donald Trump has tested positive for COVID-19. Volatility is already expected ahead of the US presidential elections, but this adds even more uncertainty. Now, for more, we're joined by Stephen Innes, Chief Global Market Strategist at AXI. He joins us from Bangkok. Stephen, President Trump's positive test, would you consider it a game changer for markets in the short term?
Well, I think what we're seeing right now is a reality check in the market that is starting to warm up to the idea of a Joe Biden presidency, or even a sweep across the board right now. And that's bringing up a number of issues in the markets, including the corporate tax implications, and that's weighing down on equity markets right now. And also the anti-oil stance, which I think is a big thing here. And not only is it weighing down on oil stocks, but we could be looking at oil as the next Biden barometer, similar to how we looked at the peso back in 2016 as a Trump barometer. This is taking on a whole unique spin right now, because we know that the green agenda from the left side of the floor is very, very strong. And we think that basically oil prices might fall under Biden's green thumb. And this is what we're seeing playing out here. Lots of forks in the road, lots of pivots happening. But the sell-off looked to me to be rather controlled, not sort of random. It was sort of pricing in these corporate tax hikes.
Well, Stephen, speaking of this Trump barometer, do you think markets will react to every update on his condition, or are investors perhaps maybe waiting for the result of November's polls?
I think what we're going to see develop in the polls is a widening of the polls in Biden's favor. The prediction polls were really sliding towards a 90% Democratic election win. The market was pricing in roughly about a 60%, and that gap's going to narrow. I think the market is therefore going to price in closer to what the polls are, and this is where the risk events are going to unfold. We're seeing it now, just getting back to the fall in the equities. I don't think this is just an uncertainty-driven risk off. This is a certainty risk off, in the sense that we know Biden's going to get in, and tax hikes on the corporate sectors are going to occur.
The markets are reacting in that way. I mean, there's still a lot can happen. The polls have been wrong, as we saw in 2016 as well. That's just the way they're hedging?
Well, I mean, obviously, we have to be a little bit careful about reading too much into the polls. We've seen some swings, but we think this is sort of a punching the Democrats' blue ticket to the Oval Office. Catching COVID and being so openly sort of anti-masking and what have you. This isn't going to resonate well, generally speaking, in our view, with the U.S. public. We think there's going to be a bit of a backlash there. It's just the way that I think the market's going to evolve and price in these situations. Look, as we move into 2021, we think the fiscal expansion policies by the Democrats are going to play out quite favorable for the markets. But of course, between now and then, there's considerable risk. And that's getting back to your point, Steve, where there is that element of uncertainty that we have to deal with on the polls. But I think the polls narrowing would be a big uncertain risk that the markets are not quite prepared for. So I agree, there could be a bit of a risk there.
Well, the U.S. jobs data will soon be out. Will that help restore some investor confidence? I mean, short-term volatility, perhaps long-term stability?
It could, but I think it's going to be quite fleeting. We've had a couple of back-to-back shocks. One was the fact that the market was giving the benefit of the doubt to the U.S. lawmakers that they were going to deliver a stimulus package. That didn't happen. So risk was trading off this morning on that fact. And then getting hit with this president testing positive from COVID out of left field. That was just a game changer for the day. Risk traded completely off. Now, where we're at right now, we're in that sort of reevaluation mode, and we're coming up with ideas. We're trying to figure out where we go next. Obviously that longer term stimulus effect is quite supportive for risk sentiment, but we have to be concerned about these, issues that'll develop. Are we going to see another election risk event? We've already had one October surprise. Is there another October surprise down the road? Will Trump turn around and start escalating towards China? Will he start escalating towards Iraq? All these possibilities and all these forks in the road present different outcomes. And I think that's what we have to be on guard for, not necessarily today's event, but what the future events may have in store.